By this time, we know Hindustan Unilever has fallen 7%. Yes, in a day, 7% of fall for a leading FMCG sector stock. So, always there will be some reason which the mainstream media will be portraying and social media will also be portraying. The reasons are profit is down by 3% and EBITDA margin is not aligning with the guidance and volume is less. We will not stay with this high level reason. As a happy investor, we will just dig down and understand what exactly has happened, and we will move with facts and we will take a decision accordingly. And a small disclaimer, this is a candid video in an effort to reach this message on time to you before you actually open the market tomorrow. I thought like my views I can share it with our friends and family here in the community. So I am sharing this across. So here and there, if I fumble upon, please forgive me. Just this effort to reach the message on time. Let us get back to the video and yes, Hindustan Unilever. You can see that. Let me switch off all the indicators we have. So right now, Hindustan Unilever, I am not able to show this because of SEBI guidelines that I have to use 1 month before chart. So 7% it has fallen. As per our strategy, which is 52-week high low, somebody is hearing this new to this channel, go back to the channel and search for how to select stocks. You will actually find a video, do this. You will find a complete strategy to understand on only Nifty 50 companies how to filter the stocks, and also in addition to this I have given so many things in this channel itself. Explore it. For now we will take benefit of 52-week high-low strategy to evaluate Hindustan Unilever on the technical front, and also we will dig in deeper for the 3 reasons what mainstream media and social media is saying about the fundamentals. On the 52-week high-low, as per me, when a stock hits 52-week low, I can actually put a GTT. And forgive me, this is 1 month before chart because I am just going to align with SEBI guidelines as I said. So you can go and check it in your chart. If it is aligning with 52-week high low, I usually put a GTT in 52-week low for the buy, and I usually sell it at 52-week high when the stock reaches. The potential is somewhat around 30%. And more than this, if I actually switch off the indicator and plain blank, if I see also, there is a support and resistance I can see. One is support here and resistance is coming somewhere here. If I measure the potential between support and resistance, it is 23%. For a large cap company, it is so good. But as per my conditions, like at least one time it has rallied and second time it has also rallied, and I will keep this here because it has touched. I would have bought it here and it has rallied, and third time actually it has given a good rally here, and fourth time also it has attempted. Why not fifth time? Yes, fifth time it got failed, but still there are n number of reasons that it can fail. But definitely a stock which has gone for 4 times, I believe that it will also go on the 5th time also. So whenever the stock comes to this support zone, not now, not later, not before, whenever it comes, my actual thesis is put a GTT and it will take care of the buying, and put a GTT on the 52-week high or the resistance, it will take care of the selling. So that's how we actually make this an opportunity. Hope technical front you are clear. If you are really interested to understand what this 52-week high-low strategy and across which stocks I can apply, I have already shared 23 list of stocks in actually another video. If possible, I will attach the link in the description. Just go and watch if you are just fond enough to understand what this guy is actually about to do in this YouTube. And getting back to the challenges. See, I am going to the screener.com and Hindustan Unilever. For me, I have my own filters. For me, stock PE 43, I don't compare it with any other companies or any other industry PE. I compare it with own 5-year PE. In the chart, if the 5-year PE is beaten down below this, then definitely it is actually a great pick. For now, if you can see, yesterday or Friday it was 33 and suddenly the PE raised. Even I got confused. I don't know why it is showing 64 on the yesterday and today it is 46. If I put P&L, here EPS is clearly shown as per the current result 63. If I go to quarter also, it is shown 11 plus 12, it's like 23, 24, and 24 plus 28 is like around 48 and 52. and again this is 63. So there is some glitch in the screener, might be because the result has come, it has not taken the value. So tomorrow it will be corrected is what I guess, but P remains 33 when the median P is 46. So that's a great signal for me that it is actually not overvalued. Okay, so debt to equity ratio is under control, and ROE is commendable, and ROC is commendable, and there is no pledged percentage, and 52-week high is actually 24% above the current price level, and it is down from 30% from all-time high. This is great for me in the first look, and let us go to the problem that they are discussing about. For example, the number one problem is dip in profit. Yes, I agree. Maybe we will not actually discuss in year because this is with respect to quarter. We will actually go to the quarterly profit. What that means is revenue is all-time high, and expense and operation margin is actually, operating profit is actually all-time high, but what they are calling it as, this profit has come down. If you read the news, there will be some different digit. If you expand the profit, they are talking about this 2673 profit for EPS. So 2673 and 2680. You leave about this calculation which is there for now to avoid conflicts. I'll take 2680 for the calculation. Now what they are calling is profit is less to the year on year quarter. I agree, because it says 2768 was earlier profit and 2680 is current profit, which means I think 80 crore it's right now gone with respect to surface level analysis. But when you go on deep study, what are the reasons on June 2768 came, understand the tax is 16%. When the quarter on quarter tax is 26, 26, 27, 25, 26, 27, 25 and 27, often it is 25. Why it's 16 here? If you put 27 here, 10% of this will be actually added. 10% of this if we had, then it will actually decrease by approximately 300 crore. If it decreases, then it becomes 2400 and this becomes all-time high profit. This is what they call it as base effect. Base effect means this base is one time, it is exempted, and the 16% tax as created naturally the higher profit in the last June quarter. That base is right now calculated, and because of that base it's 2680 now, which seemingly 2-3% less. But I don't actually count on this, but I actually go by this operating margin or profit after tax. This 3294 is actually still less than 3632. This is how a person who understands the stock market, who understands the news, and who actually reflects on what is being said will do analysis. So this is one part of the story, and another part of the story is if you expand the other like exceptional income, okay, this is minus 98, this is minus 75. Net it's not going to be a big deal. So here again this minus 98, if you discount, it will add 20 crores more. So net exceptional income is not a big problem. This is typically due to 16% of the tax in the previous June of 2025. So this is one thing which is convincing me. I don't have any problem in the profit. In fact, management is very confident of that. Profit, sales, growth, everything. We'll see that also. And second problem is EBITDA. See, I don't have any direct calculator. I understand what is EBITDA, but to communicate what is EBITDA and what is the current EBITDAs, I take the help of documents. I'll open the PPT. I have opened already. So in the PPT, if you go to 12th page, it is showing like margin, EBITDA margin. In one of the con call, or at least this press report today, they mentioned it very clearly when the people were asking like, your EBITDA margin is shrinking, is there any plan? No, he corrected the person who asked the question. The EBITDA margin is not dropping, it is 23.0, which is in line with whatever we guided, which is 22.5 to 23.5, I guess. So it's 400 bips down, I agree. But what management calls it is, we are in line. We cannot just make like always 23.5 or 24. So it's also okay. They are saying in a consolidated way, whatever we committed, we are actually in line with our guidance. That's also satisfaction for me. And one more thing, the volume dip. See, volume dip, they are saying no, this management itself acknowledging the volume dip. There are situations in the market, rural demand and other things are actually playing out. So they are confident enough with the portfolio of whatever they have, they will be able to scale up the volume And also they are confident with inflation, how it is going to play out with respect to the El Nino, with respect to the monsoon, with respect to the like East Asia problems. Pretty much they are confident. But one question we have to ask, now most of the questions are answered, important net profit is also answered, but the point is we are not like feeling 7% of the fall, is it actually like meaningful fall for this kind of little small bad result? If you calculate 2% of the profit fall is causing 7% of the price fall. This might be true for the market sentiment, but the person who sees the stock price on the long term moves based on the fundamentals, this is an opportunity for him to analyze, learn what is happening, understand what is actually facts, and take his position accordingly. Even after understanding of this situation, after understanding the fundamentals, after understanding the technicals, after understanding the sentiment, still the stock can fall 5-10%. Definitely, because you never know what will happen tomorrow in stock market. So what we can actually do is remember these things. Only 4 things in our control. What stock we are buying, is that quality stock? How much we are buying, is it within the portfolio allocation? Like if it is large cap 5%, mid cap 3%, small cap 2%, that too in the first trade, we have to strategically position of 1/5 rule. Go back to the video which I have referred and understand what is this 1/5 rule, what is the portfolio allocation. If I explain, it will become a separate video. So what stock we buy, is it quality stock? And second, how much we are positioning ourselves, position sizing is a matter. Third, at what price we are buying, do we have a margin of safety at this price? If it is yes, take a decision. If it is no, stay away from it. Third, do we have a target price at which we will actually exit this position? That should be very clearly defined when you are actually taking position. So these 4 things are in control: quality stocks, position sizing, at what price we are entering, at what price we are exiting. 2 things it's not in our control: time it takes to reach the target, and after you bought, it can go up, it can go down. There is nothing can be done in the market. Nobody has a clue how to handle the situation. But still, people will be making money if you stay put, if you are consistent enough with your conviction with which you have selected the stock. So hope you understood what I am trying to say. Again, the stock might go further 5%, 10%. Strategically position your position sizing according to that. Use 1/5 rule so that you have some allocation in your large cap up to 5%. You have something when the stock falls 5% or 10% from here. Because if you clearly see a person who has actually positioned himself somewhere here, he might have thought the stock is going to go directly here, but it never happens like that. It has come down for a percentage of maybe 13%. So if he is a wise person, what he will do is like he will not allocate his full allocation of 5% here. He will allocate only 2 to 3% here. If a stock falls, he will actually plan to allocate it here after 10%, after 15%, after 20%. So that we have allocation left out in our portfolio sizing to capture the opportunity if it goes down. Then he actually can book the target somewhere here. That's what a wise person will do. I hope you are wise enough to understand what I'm trying to say. Do not go all in at the one shot. Go strategically using 1/5 rule and see this stock, even the greatest stock, after the buy point gone down and gone up, gone down, gone up and hit the target. This is clearly not a buy or sell recommendation from my side. I always encourage people in understanding better the stock market, how it actually works and actually how we can take better decisions. That's how I grew last 6 years. I'm just sharing my knowledge here in this channel with you all people. And I run a community where I teach people on what are the basics and intermediate and advanced skills of whatever I learned in last 6 years. I have made a framework and I'm teaching them to the people. I started with friends and family. If you are interested to understand the stock market in the practical way, like how we actually interacted last few minutes, then consider checking out the website in the description. If you are interested to explore that testimonials of people who have been actually traveling with me for a few months, please explore the testimonial section and understand what actually they feel after 6 months of the journey with happy investing. And going back to the video, I always see the opportunity when there is an arbitrage. It's not an arbitrage of price alone, it's an arbitrage of sentiment of market with respect to the fundamental of a company. When the fundamental of the company is too good, and the sentiment of the market is punishing for the small problem of the fundamental by 7%, I call it as arbitrage. I call it as opportunity. And sometimes I go based on my strategy. I have explained the strategy already, support and resistance, and also the 52-week high low. If you want to go in depth of 52-week high low, go back to the video and see how to select the stock, search for it and get the video and get started with that. And I actually shared some of the opportunities also before a month. Sincerely, I wanted to actually share more things, but I don't get time. So I just restrict my sharing with respect to my own community. If you want to understand the detailed analysis, please check out the link in the description. Join the community in the WhatsApp. I will be sharing the detailed version of my session with my community, which I'm going to have it tomorrow 5:30 to 7 o'clock morning. But I will be sharing the recording in the WhatsApp group. So if you are interested, please check it out. And that's it for today. Thanks for your time and happy investing.